Welcome everyone. Today we have our another new episode, and this is very important episode because in Asia Pacific, fintech growth is very important. Even in Malaysia, Indonesia, China, Singapore, uh, the young communities they love to learn more about fintech growth. So we have our world famous speaker, Professor David Smith, Professor Donalds, Mr. James Eid, and youth panelist Mr. Adam and Mr. Jeff. Thank you for joining today's sessions. I want to start from Professor David Smith. David Smith, how do you want to analyze this fintech growth? What will happen in the futures? Because here the youth community has huge interest on fintech growth.
Well, fintech is a very broad network, but it's very interesting. In 2020, the global market size for fintech was a little bit over $100 billion US and is expected to grow about 9% every year. So there's a lot of money in fintech and being directed by fintech. And it's an interesting set of drivers that go into it. And some of the key things that have helped us there is really the growth and use of smartphones have been one of the things that has really helped enable the fintech marketplace to take off and is really in there. And the other thing that's really dramatically helped is the increasing digital network and the increasing speed of the digital network to get there. And it lets us use advanced technology and solutions for really delivering banking and financial solutions pretty well. Now, there's a lot of different things that go with it. Fintech is actually one of the leading market segments that uses hardware components to push things very forward. Uh, Fintech is one of the top five market segments that, for example, using VR technology to pull the things in there, and is a real heavy user of AI, of blockchains, of cryptography, biometrics, and others to begin to enhance the customer experience and try to bring some stability into a marketplace that has some real challenges in it. Uh, there are some other things as you look there. The impact with governments with fintech is still being worked out, and it is really at some early stages. You have, for example, UK has recently delisted one of the largest fintech market providers in UK. You have others who have dipped their toe in it and have come out. China has uh, done a lot in China in fintech and has begun to pull back on it as well, particularly around the cryptocurrency portion of fintech. But really, let me just take a moment or two and talk about
Mhm,
some of the market dynamics.
mhm.
One of the drivers for the market dynamics is really a very much increased demand for mobile banking. I can tell you personally, I have not been in a bank lobby probably for 2 years and didn't go very much before that. So the whole mobile banking phenomena, the whole digitalization of the cryptocurrencies and things like that have become a huge driver to help this work. And RPA, which is called robotic process automation, is another area that is really stepping up to do work in the whole fintech area. Well, that's a good driver, but one of the big restraints in fintech is the data security concerns. You know, we fintech collects a lot of personal information about the individual, the fortunes of the individual or the company is very much online with all the digital fintech banking and other things. So the data concerns are still a really big restraint. Uh, Technology in this area is going to continue to grow. And really, if I look at the services outlook inside fintech, I can take and break fintech into a number of different segments. Um, some of these are payments, wealth management, fund transfers, personal loans, P2P banking, personal finance, insurance, and the whole cryptocurrency put in there. And one of the things that we're beginning to see is increasing uh, insurance plans to cover fintech and to go in that, which should help uh, increase the acceptance of fintech. Um, and we're going to see that going forward. Uh, it's interesting. Retail banking, as part of the fintech ecosystem, has grown tremendously the last 2 years. A lot of that's because of COVID, but we're seeing that really grow quite a bit, and that in crypto are the two that are leading the growth of almost 9% per year, uh, based on that. Um, if I look globally, the Asia Pacific market is the largest market in fintech right now. Um, and the US market is the second largest market of revenue share going there. And that will probably continue for a while. Um, and if I look at Asia Pacific has more individual investors in fintech versus institutional investors than the other regions. Europe is really going to have some significant steady revenue growth coming up, but they're kind of lagging. And then South America and Africa, of course, are pretty far behind them. Um, the other thing that I'm seeing in fintech is we're really beginning to see more microservices that are cloud native being offered. And what these are is they're becoming containerized tools, containerized microservices that are letting a lot of other organizations use them to automate part of the fintech operation. Where earlier a supplier had to write the whole application. And today we're seeing it really go where we now have people providing platform as a service, microservices as a service, finance microservices as a service, and others. And so that movement is going to do more to accelerate fintech applications and fintech companies, because you can now leverage more and you can get to market faster and hand it. Once again, one of the big constraints, though, in the digital crypto part of fintech is the interplay between financial crypto companies and national governments. And the logic behind that is pretty straightforward and simple. Most national banks, most countries use their national bank to control inflation, deflation inside their border, to stimulate market conditions, to uh, manage the growth or the lack of growth within their nation. So you see national banks valuing, devaluing currency and valuing, devaluing interest rates. The challenge with a cryptocurrency is it bypasses the national bank, and they have no control. The country has no control of using the national bank to help stabilize, regulate the country. So that is a huge constraint, and is probably what is inhibiting the growth of large-scale countries' adoption of cryptocurrency as a currency within their country. So that's a pretty quick overview, uh, and trying to set the pieces in place. But fintech is a very broad, segmented marketplace, from things that are highly regulated, like the retail banking side of it, to the wild west of the cryptocurrency exchanges. And and you're seeing things like that. My company has things in fintech and in crypto, In fact, we have something where we have now servers in space that we have not brought online yet. But this is going to be a place where we're going to do some of our cryptocurrency processing in a very interesting environment. So that's kind of my introduction.
Thank you. Thank you, Professor David Smith. Mr. James Seed.
Thank you, Sharif. That was great introduction, David. I would say, if we want to talk about fintech, it's the marriage or the merger of financial systems and technology systems. So fintech, finance and technology. We're talking about merging them, and how we first saw that was in the back end of the financial industry. So it was kind of invisible to the end user or the consumer, but it helped the efficiency of the back end operations, the communications of them, of transferring of funds and all of that sort of stuff. And it was kind of a big deal on the back end, but we didn't really see it. And then PayPal was, I think, one of the first early adopters of this. And all of a sudden the consumers saw it. Wow, I can just transfer so easily money that I used to take. I used to have to go to the bank. I used to have to fill out forms. And now, I just type in an email address or something like that. It's so easy. So that's what we're talking about, is the technology making it easier to use the financial systems. And I think David is right on. We're seeing this financial impact and the crypto impact. But what does it mean to the future? What can we tell you about how it's going to change? Right now, I would say there's not much that a guy like me can tell you about what's going to change, but I will tell you this, that there's going to be jobs in the blockchain industry, and especially, and you can be an engineer, blockchain engineer, and you will be in high demand. You know, people who can do these things, app developers using this, they're going to be in high demand. So, but you might shake your head and go, well, I'm never going to be a blockchain engineer. I'm never going to be an app developer. Guess what? There are also sales jobs that are going to be in the future that aren't there right now. Sales jobs are the people that say to a company, to somebody who has money, this is how we can make your company more profitable. Use this blockchain, this fintech application that we've developed. And this salesperson doesn't really have to understand the technology behind it. They just have to be able to communicate it. So there's going to be sales jobs that we don't have right now, but they're going to be there. So get yourself familiar with the terminology. Get yourself familiar with how this can make somebody's lives easier, company more profitable, and then become a salesperson. And you won't be called a salesperson. You'll be called an account executive. So it'll look good on your business card. So these are things that are going to, and the cybersecurity aspect, if you're into that kind of thing, protection of all of these, and blockchain has this amazing future capability of giving additional security, but security is still going to be one of the most important aspects of this new world that we're going to face. And so if you want to get into that aspect of it, there's going to be a career for you. So these are the types of things that I think we really want to focus on. What is the future? No, we're not sure, but I really love the idea that we're talking about, the fiscal and the crypto and the governments and all that interaction. And then David got into the banking industry. So what's going to play out there? Because there is something that's going to happen between the banking and the cryptocurrency world. And I can't tell you what it is, but stay tuned, because the banks know it's coming, and the banks know we don't need them in this future world. So the banks are going to take action. The banks are not going to let themselves become obsolete. So what's going to happen, I don't know. But this is the kind of thing that I'm fascinated by, how these future developments will play out. And I think an educated guess or two is worth it. And discussing like we're doing right now is definitely good use of my time. So I'll stop talking and let others share. Thanks very much, Sharif.
Thank you. We have our friends, Mr. Adam. How do you want to analyze today's topic, especially fintech growth, even from inside industry? If you want to add some point, it will be helpful for our audience.
Thank you, Sharif. Thank you for inviting me again today, everybody. Well, the fintech, we are now witnessing a time where technology is on the cusp of becoming so small that soon it will be quite widespread and commonplace for people to start having more micro technologies inside their bodies and eventually nanotechnologies. So even in the past couple of years, there have been stories and articles reporting on companies who ask their employees to have chips in their arms, to have access to restricted rooms and programs and software, and even recreationally, as well as corporate interest in implantable technologies. You have biohacking subculture where this kind of innovation exists on a bit more of a clandestine level. And people are having implantable microchips and RFID chips in their arms that have important personal information like medical information stored so that if there is a health-related incident and the patient is incapacitated, medical staff can just scan the chip in the patient's body and information about the condition is displayed. Doctors and nurses know what they are dealing with better. So of course it's inevitable that people will do their banking and financial transactions on these kinds of implantable technologies eventually. And like I said, we are entering the age of normalized implantable technology and the so-called Internet of Things, where items will be interconnected, like clothes will communicate with social media as well as kitchen items, doorbells, cars, vehicles. And with the COVID situation giving human civilization a bit of a shake-up, it presents something of a golden opportunity for corporations and conglomerates to start normalizing fintech as I described. But of course, that raises a few ethical and moral questions, such as this kind of interconnectivity and centralization, how people with, for example, slightly problematic views, loyalties, political affiliations, and so on, will they have reduced accessibility or temporary restrictions enforced, like what we see happening with social media, Facebook in particular. So, for example, maybe if someone raises a legitimate grievance against something that is normalized and widely accepted, so much so that it is considered offensive by the mainstream to even ask such a thing or to ask questions, thus bringing down on themselves a kind of strike one and a strike two and a strike three, where a bank locks the problematic customer out of their finances for a day or two as a kind of Pavlovian punishment. The technological innovation and development is an inevitability, really, of course. So it would be useless to delay, curb, or slow down these emerging innovations. That makes discussions about ethics crucial, really. I can't predict whether the whole planet will go completely cashless, but there are some individuals with a vested interest in such a development. But most ordinary people, I think, still want to use cash or make a compromise to use cash and digital contactless banking like we do now. So, of course, security technology will need to be improved in tandem with these emerging financial technologies. I remember how uneasy contactless transactions made ordinary people feel because of how seemingly insecure it was compared to cash or transactions with a PIN number for your card each and every time one used a card. But as life goes on, people adapted to it, it became mainstream, those concerns were mostly forgotten, and in the UK, in this country at least, contactless limit went up from about £30 to about £40, I think, if I remember correctly. So it would really be helpful to keep asking these questions and be more vigilant, because these kinds of shortcuts, such as contactless, can compromise financial security. But people seem to be quite happy to just go along with it. So.
Thank you. Professor Donald.
As usual, everyone brings up such interesting points. I could spend my entire time bouncing off of the great ideas I've heard so far. One thing that I'd like to just kind of lay a foundation is to kind of think a little bit about how the financial system works today. And I want to just give an interesting example, is that if I use the traditional way, in fact, I was paying my rent this way until recently. Now I don't pay rent, but when I transferred my money from my account to my landlady's account, it took 3 days. Now, why is that? I mean, that's a pretty interesting question, isn't it? Well, the answer is because there's an intermediary called a clearinghouse. And what that's for is it's a little bit like, basically they want to make sure that both ends of the transaction are valid. And the way it works is that your bank takes all these small transactions. I mean, it's a lot of money to me, but you know, to them it's considered a small a few $1,000s is considered a small transaction, and they batch them. And so what they do is they wait for a day or two until they have a huge batch of them, and then they send them to the central clearinghouse, who then executes all of the transactions. And that's called ACH. And you'll see that on your checks sometimes, the ACH code. That stands for Automated Clearinghouse. Now let's think about that for a second. Why would that be? Well, banks' computer systems are so old that they actually were probably developed when they were still using punch cards. And if you look at the way that computers and banks are, they're layer on layer on layer of legacy systems. For a while, the big deal was, I hear a lot of companies, startup companies, talking about this or that middleware. And what middleware was just software that would allow a newer system to talk to a legacy system, or legacy systems to talk to each other, and so on like that. So the actual software inside of the banking system is pretty antique. I mean, in fact, if you do want to make a lot of money, learn COBOL, because the COBOL programmers are rare as scarce as hen's teeth right now, and they still need them for banks and hospitals and some of these. But they were actually early adopters of information technology, but after they adopted it, they kept it. So that's one thing that I'd like to mention about a little bit of inertia in the fintech area. Another piece of inertia is that the banks have not wanted you to have access to this for a lot of reasons. Obviously, security is a huge one, but then it also, they want to create barriers to entry. And over the last probably 20 years, there's been more and more consolidation inside of many of the industries in the United States. And consolidation means that one bank will acquire another bank, and they'll become a bigger and bigger and bigger bank, so that we're down to a smaller set of very, very, very large banks. And what happens when that happens is that competition becomes less. So with less competition, there's less reasons to innovate, but it also makes you, if you want to get into the business, it makes it a lot more difficult, because these places already control the markets, and they're so big that being able to put a dent in the system is very difficult. So what's been exciting is people have been, I want to say one other thing is that when you're looking at, as a foundation, when you're looking at finance, it's not just a matter of putting money in a bank. You have to understand that there's these different cycles that are going on. So basically, when you put money in the bank you expect that money to be available to you whenever you want it. Okay, that's your expectation, and you're putting it in there for safety. And you may or may not know that that bank is going to take your money and they're going to loan it to somebody else. And they charge interest to the person that they're loaning it to, and they take that interest and they use a portion of that to pay you interest. And so if you put money in a savings account these days, you'll get a microscopic amount of interest, but they're still making money lending it, okay? So there's always the danger that the people that they lent it to don't pay them back, and then the bank doesn't have money to pay you back. And so there's this complicated system to try and make sure that doesn't happen, including the whole entire FDIC, the Federal Deposit Insurance Corporation. So in the United States, we have a system where that stuff is backed up. Okay, where I'm going with that is that to get in at that kind of a level is basically extremely difficult. So what people have been doing is figuring out ways to get around it. So if you think about PayPal and Venmo and things like that, they're not addressing the whole entire system. They're addressing one aspect of the system. They're addressing the problem that you had of being able to transfer money from one account to another in a reasonable amount of time. And the way they did it is to act as intermediaries. So you transfer money to PayPal, and then PayPal, after they have your money for sure, takes that money and transfers it to someone else that you want it to go to. And they've vastly simplified it so that they can tie it to your email address and make it very, very simple to transfer money from one place to another. And I'm saying that because I want to say that in the developed world, like the United States and Europe and places like that, we have this banking system, which I'll get into more later, that's very complicated. Later I'll also talk about other aspects of the financial system. But the low-hanging fruit is micro, like taking a teeny weeny itsy bitsy piece of it, just the part about transferring money from one place to another and trying to address that. So people are successfully nibbling away at one teeny piece of it at a time. And you kind of have to understand how the whole system works before you can do that. And if you look at the larger picture, I'm going to talk about later about bonds and stocks and all those kinds of things, which are other parts of the financial system. So fintech is huge and so big you can't even comprehend it. But no one can, as everyone's pointed out, no one really gets it. You can't wrap your arms around it. And and then the other thing that I'm going to finish up with is that these ossified, which means they turned into dried bones, these systems that have turned into dry bones and are both fragile and brittle and rigid, are in the developed world. And the developing world has a chance to be able to start making their systems from scratch, where you don't need clearinghouses. I mean, I can type in something right here on Facebook and somebody in China will see it virtually instantly. And I mean, so why, since money is just digital, why can't we do that with our banking system? And the answer is we can. But because of the legacies that we have here in the developed world, we're not able to do that easily. And so in a sense, there's a possibility of using fintech in the developing world to do like with cell phones, where you just skip the intermediate step and go directly to the more futuristic thing. And I'll leave it there, and I'll talk more about the broader areas of fintech later.
Thank you. We have my friends, Mr. Jeff. He already joined World Talent Economy Forum core team. He's trying to help us and grow our activities. So, Mr. Jeff, how do you want to analyze this fintech growth? And after that, I want to share some case studies. Yeah.
So the first thing I thought of when I saw the conference was on financial tech was how Costa Rica is using their geothermal vents to power Bitcoin mines. I just thought it'd be interesting, tying into the topic last week of economic sustainability and integration, I guess. So yeah, I guess there's unexplored applications for cryptocurrency mining and like solar power and stuff like that. Um, and as far as a cashless society, like you were saying, um, I guess there's always going to be, I guess there won't be like cash, but there's always going to be ways you can like trade stuff more just on a like personal level. Like I'll trade you like 10 carrots for like 10 apples or whatever. So I think even if we move towards a cashless society, there'll still be like cash. But yeah, that's all I was thinking about so far.
Okay, thank you. One of the case study, I think Professor David and other speakers will help us to understand more about this fintech report, and this report is actually based on World Economy Forum. What's going on inside the industries? The pandemic export fintech vulnerability. So what we observed, that external risk indicators, liquidity risk 17% right now, cyber security risks for fintech industry 17%, foreign currency exposed risk 12%, financial implication capital reserve 51%, current valuation 41%, current fundraising outlook it's 34%. It's very interesting. Operational cost 8%, onboard expenditure, data storage expenditure 11%, and operational performance according to year 2020. Uh, Platform downtime 1%, agent or partner downtime 5%, number of unsuccessful transaction 7%. It's according to World Economy Forum, and this report published in year 2020. It's a financial service analysis. So Professor David, if you want to add some analysis on that particular point, that how we can minimize this kind of risk in the fintech industries.
I mean, the fintech industry, if you actually go back and look at it, is over 100 years old.
Okay.
And so minimizing risk has been something that has been with us before we even got to where we are today, and is one that is kind of interesting to understand. The first electronic fund transfer system was back in 1918, when the U.S. Federal Reserve Bank introduced the FedWire fund system. So it started way back then as you begin to do it. And there, some of the dates and things around this really surprised me. But the technology challenges are always going to be here when you're moving money and when you're moving the different parts. Even blockchain. Blockchain is reasonably secure, but not totally secure. And there's multiple ways to defeat blockchain. But just to kind of put it in context, we're really pretty secure with our use of credit cards. Credit cards were introduced way back in 1950. Most of us use ATM machines. That technology was introduced in 1967. So those are fintech applications that have a lot of experience. And are there challenges? Yes. Credit cards are compromised every day, but yet we've began to play the game to update it, keep it secure, embedding chips in the cards, going to other contactless approaches to do it, to be able to control it more. And there's other things. Electronic trading was started by NASDAQ in the early 70s. And today, almost all the exchanges around the world are digital exchanges. And so it controls trillions and trillions of dollars of finance. But again, it's a digital change where finance and technology have been married to do that. And there's many more on there. Donald mentioned PayPal earlier, and it's kind of interesting to me. You would think PayPal has been around for a long time, but it was introduced in 1998, and you see that. We've talked about cryptocurrencies. Bitcoin was launched in 2009. So you begin to see those coming up here. And one of the real interesting statistics to me is, as I try to analyze this, is when I look at the academic programs a bit around fintech. The first academic program explicitly looking at fintech was started in 2016. So as an academic domain, fintech is very young with a lot of work going on. If you look in referee journals, there's not a lot of refereed articles really dealing into the complexities of fintech. Yes, I can find a lot of scholarly journals on security. I can find a lot of them on the hardware pieces that enable fintech, but very little on fintech itself, very little on the processes of fintech, very little on the other areas that usually are the bellwethers for academic research and academic scholarship. Like I said, the first program only started in 2016. So you're seeing those. So to answer part of your question, Sharif, it's an old market that's had a lot of swings and changes. But as a new discipline of fintech, it's a relatively new market where it's still being worked through what are the nuances of it. In fact, if I go and look at one of the other elements of your question, let me just look this up real quick because I know I have it here. A new regulation was just introduced recently in UK called the Payment Services Directive, the PSD2. And this is something that I think we're going to see go around the world. What it did is it redefined what can be a financial service provider, and it lowered the requirements. So what it's done is it's the regulatory element that has opened the door to a new fintech concept called open banking, where open banking is a concept where the technology lets the banking cross national borders. And much before that, all banks were controlled within the country. And there are now multiple countries who have signed on to this open banking initiative. This is going to really enable fintech to go to the next level. And one of the constraints in fintech in the banking arena is the capital requirements for reserves were very high. This lowers the capital requirements for reserves. It ups the regulatory compliance of security, privacy, and elements like that, but it lowers the financial constraints that lets people create new open banks. And this is particularly important for the people who are unbanked. There are over 10 million people in the world who are unbanked. They have no relationship with any financial organization. And this open banking initiative, some of the fintech things with microloans, microservices, crowdfunding are going to be things that also begin to address that unbanked marketplace as well. But it still is a wild west, particularly with cryptocurrency. And the other thing in cryptocurrency is the statistics I saw a few months ago. The number of crypto accounts that are unaccessible because the person died without letting other people know their password. They forgot the password on the blockchain and things. It is actually almost 10% of the cryptocurrency investments are inaccessible. So it's just currency that is going to sit there dormant. And there is not a set of rules, not a set of regulations, and the technology will not allow you to go and access that. So again, it's a Wild West, but it's getting better. The rules are coming in place, and I expect us to see open banking. I think will have a major impact. It's not cryptocurrency, it's more the regulatory banking environment. But cryptocurrency is going. I think we will see a cryptocurrency adjustment in the next 6 months as some of the regulatory impacts by countries become clear. I loved the video last week in China of a big steamroller rolling over and destroying a whole field of computers that were used for cryptocurrency mining. And to me, that's a great analogy of the love-hate relationship that countries have with particularly crypto fintech. And again, I think it's still a Wild West, and we'll see where it goes. So Sharif, that's my quick back.
Thank you. Thank you, Mr. Jamsid.
Thank you, Sharif. Yeah, and I love the idea of describing it as the Wild West, because with always the regulations and rules lag behind the technology changes, and the technology changes are accelerating. They're not just going up gradually. They're accelerating. So the lag is more and more significant, and something that we have to be really aware of and actively pursuing. I liked what Adam had to say about ethics and privacy, and who's making those decisions about what are we doing about that. And this is the question that hasn't really been decided. We're seeing like people they're saying, hey, these social media platforms are responsible for what people are saying about vaccinations or presidential elections or something like that. And then we're having congressional hearings about that. And they're saying some of the courts are deciding some things and saying, well, who has standing? And these questions haven't been answered. We're just deciding as we go along. We're making it up as we go along because there's no precedent for it. We can't cite the decision in 1885 that covers this. So we have to be aware that things are going to change. And there are arguments on both sides that are very valid in some of these discussions. So it's not easy how we're going to make these decisions, and who is going to make these decisions becomes a critical component of how the future is going to unravel. So these are important things. And I like what Jeff said about the, is currency really going to, is cash really going to disappear? Like, what is the financial tech solution for bartering systems? A lot of people barter, trade. I'll give you this if you give me that. Is there a fintech answer for that? I think, we're going to see some bartering. In what form and shape is that? I'm curious, how is it going to look? And how are we going to represent that and support it? But what is the fintech solution for food and water? Because water is life. And is there a fintech solution for that? Is it possible to put this financial and technology systems to work on solving the basic needs of humanity, rather than the efficiency of transfer of funds, which is good in and of itself, but is it good enough? Are we applying these solutions to the right problems? Who's going to decide that? These are open questions in my mind. So I think that the accessibility of the dead currency is wonderful. It's like, we don't have access to it. It reminds me of the Wild West, and people would go mining for gold. Someone stashed their treasure someplace, and there was a map to it that only that person had, and that person died. And where's the map? to the treasure that they buried. And maybe if I find it, I will be rich beyond my wildest imagination. This is the Wild West playing out in front of our eyes. This happened centuries ago, but now it's happening again in a different way. It's financial. Where are the roadmaps? Where is the map to that dead currency? It's a password. Where is that password stored? And these are kinds of things that I couldn't have thought of would be a problem. And now it is a problem. What is that dead currency worth? Well, to the person who finds it, unlocks it, it's worth a lot. And so are we going to be all good guys looking for it? Or are we going to be some bad guys looking for it? What's that going to look like? And do we have rules and regulations so if the bad guys go looking for it, we can hold them accountable? No, not now. So these are real societal questions that have no easy answers. And who is going to ultimately make the decision? It's wonderful to think about the world coming together to join these things and to have agreements about how this is going to happen. And we can get out of whether or not my country decides how many dollars we're going to print or how many euros are going to be printed just to guard against inflation or the potential of inflation, or that those types of decisions can be handled on a global level much more easily than they ever could have in the past. So what if we're changing our perspective to think of it as one world, one system applying to everybody? We're all playing by the same rules. And we all know if you're playing by the same rules, you're one of the good guys. And if you're not, you're one of the bad guys. And we have the same ways of holding the bad guys accountable. And we're all in agreement about it. Doesn't matter what country you're from. It doesn't matter what language you speak. This is the hidden potential of fintech, to my way of thinking. Thanks again, Sharif. Wonderful topic.
Thank you. Mr. Adam.
I'm glad, excuse me.
Mr. Adam, can you hear me?
Oh, yes, I can. Can you hear me? Can you hear me?
Yes.
Oh, okay, yeah. Okay, sorry. Yeah, I'm glad Mr. James E brought up the issue of bartering, because I was just thinking about that myself. I was wondering, does bartering have a future? And will bartering become outlawed, since some authorities have a tendency to enforce punitive measures on human behaviors that they cannot use as a resource to make more money off of, unfortunately. And I was just thinking about what Mr. Donald Steiny mentioned. I like the word middleware. I love hearing these new words. It's great. And I remember thinking similar thoughts and asking myself similar questions as Donald did when, for example, I transferred some money from savings to my account, thinking to myself, well, why does it take one day to transfer funds to my account when digital technology can transport large chunks of data and information in a matter of milliseconds? So that shined a bit more of a light on that, and to try and answer some of the questions, really. That in itself reminded me of an interesting trend I heard about or read about, where the military, banks and other organizations where security and data protection are paramount, still to this day use vintage, old style forms of technology like analog and tapes, because they are more secure, in some ways more robust and harder to hack into and harder to break into. For example, I think some nuclear facilities still use floppy disks for launching and guidance. So what was once military grade security measures like fingerprints as well are now being used by ordinary people in mainstream society. Like for me, since I set up my iPhone to grant me access to passwords and saved information using my fingerprints on the button. So, and with some kind of issues with security, for me, it's a bit of a chicken and egg situation we have here, because as technology gets more advanced, so does information security. But then again, so do the means and methods to hack into devices and bypass security protocols, like intelligence and counterintelligence. As intelligence becomes more advanced, so does counterintelligence, surely. And again, the same with like terrorism. Counterterrorism grows more advanced in order to keep up with new strategies strategies in terrorism. So they parallel each other and grow, racing each other to be more advanced to outwit and undo their opponents. So yeah, it's a bit of a chicken and egg situation with with this advanced technology and security, but also ways to circumvent that security.
Thank you, Professor Donald.
Hi there. Well, love what everybody's been saying. I want to talk a little bit now about the finance in fintech, and it'll address some of the questions that you have. For instance, fintech means financial tech, and we've been talking about banking, which is one aspect of the of finance. But there's another huge aspect of finance, which is basically managing risk and also capitalizing on risk, making money on risk. And I love David talking about how new some of this technology is. And it's an amazing fact that the first book on modern finance was written in the 70s. It is not an old thing. It's the kind of financial stuff that's going on right now, like derivatives and default swaps and all these different kinds of things that are absolutely incredibly difficult to understand. I was reading up on them last night, and I am not going to try and explain them to you yet. That'll be on a later show. I have to spend a little bit more time learning about that. But I mean, in the general thing, there's if you look at the finance, there's things like commodities markets, and then there's what are called commodities futures. And a commodities future is when you say, for instance, you take oil, and you think to yourself, well, the price of oil is going to go down. So what I'm going to do is I am going to buy oil in the future. I'm going to contract with somebody that I'm going to give them, say, 100 barrels of oil for $1,000. And you're betting on the fact that in the future, 100 barrels of oil is going to cost $900. So what you've done is you've contracted to sell them the oil, give them the oil, but you don't have to deliver the oil till sometime in the future. So what you do is you wait, and then when the oil is 900, and they pay you $1,000 for the oil, and you wait, and sometime in the future, at a specific time in the future, you have to deliver that oil, and you wait, and you don't buy the oil until that time. So you pay $900 for the oil, and they paid you $1,000, and so you make money that way, and that's what's called futures trading. And so some of the levels of complexity get to be where the actual contract becomes valuable. So the contract itself becomes something that you can sell, and based on if the idea happens that all of a sudden everybody realizes that the oil is going to go down to $800, well, then you'll make $200 on it, so the contract becomes more valuable, and you can actually sell that contract to somebody else for, let's just say, $1,300, somewhere in the middle. Anyway, these things are, just from my explanation of this one teeny simple aspect of it, you can see that it gets incredibly complicated and very difficult for the human brain to understand. And what's also interesting about it is that money is making money on money, but it's not, well, so part of fintech, or a big part of fintech, has been developing software that can do those calculations. And that software has actually crashed the world economy at least twice since the 90s. And the first one was when the Russians defaulted on their payments. So the Russians had borrowed a bunch of money from the rest of the world, and then they said, oh, well, we're not going to be able to pay it back, and the world economy crashed. Now, why was that? Well, the answer was they were using the sophisticated model for buying and selling stocks called the capital asset pricing model. And what happened was that the people who were using that model were making a little bit more on their stocks than people who weren't. And so all the brokerage houses and things, all the financial people started using this model. And it's happening again today. And what happened was that the model started driving the market. So in other words, the market adapted to the model instead of the model adapting to the market. And since it was a model, when one of the parameters completely went south, i.e. the Russians defaulting on their loans, the model couldn't predict anymore. It crashed the stock market and caused a huge recession in the 90s. Another place where financial instruments have crashed our economy is that basically the securitization of federal real estate loans. And so when you go and get a mortgage in the United States, when I was young, and much past that, when I was less than young, you would go to the bank and they'd see how much they trusted you, and they'd find out what a good person you were, and blah, blah, blah. And then they decide, okay, we're going to lend you the money so that you can buy a house or whatever. Usually, in this case, we'll just look at houses. And the federal government insured that loan, and they said that those loans were available. People could buy those loans. And if you ever have a real estate loan, you'll notice every 6 months, you notice it's been sold to somebody else, and all of a sudden you'll have a new mortgage lender. It's pretty interesting. But they were a very bad investment, because really what you want to do is, if you invest your money, you want to be able to have some sort of stable returns on it. And somebody can sell their house and pay off their mortgage, they can default. There's all these kinds of reasons that having a big chunk of money like that invested in one place is a bad idea. So they got the idea, okay, what we'll do is we'll securitize them. And what a security is they basically take the loans and break them into little teeny pieces, just like stock in a company. Like, thousands or millions of people can own stock in the company because they break the entire value of the company into these teeny little pieces. And so what they did is they bundled together these loans, a number of loans together, and then they sold little pieces of securities. And that worked out because it smoothed things over. If one person sold or one person went broke or something, there was enough in what they call the tranche that they could that it could still get stable returns. And it worked so well that the banking industry started basically hiding worse and worse loans into these tranches, until eventually enough of the loans started defaulting that all the tranches defaulted and the entire economy crashed. And this was in the 2008 recession. That was what caused that. So these financial instruments are they're really worth looking into, because they're a lot of this can be done just by your computer. You can figure out what's going on and learn to program these models and learn how these models work. Interestingly, the best model is to just invest, for you personally, is to invest across the entire, invest across the entire stock market, because the stock market just keeps going up. And the people who are experts at predicting the stock market actually have worse records than the people who actually just tie themselves to these indexes. But part of what they're doing here is they're managing risk. So what is the risk that the money that you invest is going to go south? By creating these tranches, by creating the capital asset pricing model and things like that, they're running risk across a much larger pool. So it theoretically reduces the risk. And I think that when we look at blockchain and other kinds of currency, that's something that we really need to think about. And one of the things that the Federal Reserves do, and the United States has gone through periods where it didn't have a Federal Reserve, and then it did have a Federal Reserve. And if you look at what happens when there's no Federal Reserve, what winds up happening is that every bank basically gets to issue their own currency. So it wound up there was a number of different currencies in the United States, and so when the point of the Federal Reserve is that the currency is backed by the full faith and blah, blah, blah of the United States government, and the whole thing about loaning money to the banks is what the Federal Reserve basically does. They get to manipulate the interest rates that they loan it at. So if there's too much money in the economy, they raise the interest rates so that people are less willing to borrow money because it's more expensive. And because of that, it reduces the amount of money that's in the economy, and it allows the currency to remain stable. Blockchain-based currencies, cryptocurrencies, of which there's thousands now, don't have that mechanism, that price stability mechanism. But a number of places are starting to try and do that now. So, for instance, Facebook has just come out with, what do they call it, Diem. And the whole idea of Diem is that they're gonna maintain the stability of the currency. So basically, problem with blockchain is now it's great because you buy some blockchain, you buy a Bitcoin, and wow, it just keeps going up and up and up. But what happens if it goes down, down, down? And how can you make a transaction where you're paying for something in the future, like the futures market that I was talking about? How can you do that if you don't know how much the money is going to be worth in the future? So in order to do a lot of these things, you have to have some sorts of currency stability. And 3 days ago, Powell, who's our Federal Reserve Chairman, addressed this issue. And what's probably going to happen is that governments like the United States government are going to start issuing their own cryptocurrencies, which they'll manage based for the stability. And a point of that stability is in much of the world, and still to this day, people will actually pay to put their money in US dollars because they know that US dollars are going to remain stable. And so that's one of the reasons that the major reserve currency in the world is the US dollar, which means that if I want to buy something from some other country, basically I pay for it in dollars and they pay me back in dollars. So I think that we're going to start seeing the governments get involved in that, but I don't think it's a bad thing at all. I think it's necessary to be able to do the kind of financial risk management that has some downsides, but overall it's been incredibly valuable. All I can say with that is that in all of these things, there's micro parts. It's not one big thing. It's got little pieces. Just like we're talking about the banking industry as, we look at it as a whole, but you look at the one little teeny piece of transferring money from one place to another in a reasonable amount of time. It does, and that is something that you could work on if you're working on fintech yourself. So I'll leave it there.
Mm-hmm. Mm-hmm. Thank you, Mr. Jeff. So we are like going for our concluding remarks. So what you want to add?
Yeah, I don't really have anything to add other than what I said the first time. Very interesting stuff into from everyone. So thanks. I'm just glad to be here. That's it for me.
Mm-hmm. Thank you. I directly want to go for the concluding remarks and very short concluding remarks for today. Professor David, then Mr. James, then Mr. Adam, then Mr. Donald, and finally Mr. Jeff. What's your concluding remarks for today? Before that, I just want to add, our audience, please share our content as much as possible. with your government, with your academia, as well as with the different corporations. And by this way, I'm sure many of the things you can learn and you can grow. Already World Talent Economy Forum with our academy, we are taking an interesting initiative. Let's say we start our undergraduate, masters and PhD program. And beside that, we are doing a lot of professional certifications, consulting for different startup and small medium enterprise. And we are doing some deep research on different industries. So we are very much open for collaboration. Those who are interested to join in World Talent Economy Forum, they can join. Thank you, everyone. Professor David, what's your concluding remarks today?
I will go very rapidly then, in the interest of getting through with everyone. My really concluding remarks is fintech is a relatively new old industry, like I had said before, so they're still growing a lot. For fintech to grow, we really need to have it be sustainable as you look at it. There was a recent survey of global customers that stated that 92% thought that their financial institutions should be sustainable, that they should be involved in the community, but that they also should be involved globally. So the fintech technology is helping even the normal banking industry begin to go to where the customers want it to be. And we're seeing that going. Fintech, as I said before, is still a wild west. The growth of particularly the cryptocurrency side of fintech is still to be determined. And I think that we'll see that working. But those are the elements I think are most important here. But the trends in fintech are really looking at addressing some of the most pressing problems of our time. And the fundamentals in fintech should drive this almost 9% growth, compounded each of the next 5 years. So it's one that there's a lot of opportunities for startups, and a lot of opportunities for government and academic institutions to come together to help mature and settle how this is going to become a global fintech marketplace. So that's my concluding remarks. Thank you again, Sharif, for letting me be part of this.
Thank you. Thank you, Professor David. Mr. James, what's your concluding remarks today?
I want to thank you as well, Sharif. This is a great topic, and I've taken a lot of notes, as I usually do on all of your shows. And there's a couple of things that I want to conclude with. One is that this is, the Wild West, and this is a growing thing. So we're talking about things that are going to happen, not that have happened, for the most part. These are things that are developing before our eyes. So, we don't have a lot of answers, but we have projections, and we can always have a certain amount of confidence in our projections. And we have to behave that way, as though we actually can figure out and then we'll adapt to what we haven't figured, what we didn't anticipate, because that will be coming. I want to talk about the academic world, because David has mentioned this is, you really want to go to the peer-reviewed papers on these subjects. Well, who are the peers? This is such a new industry that there might be a handful of people that are really up to date, have really studied it from a purely academic standpoint. And if I'm producing a research paper, and the peer that I have, he and she and I hate each other. Am I going to get a good peer review? No, because we're on opposite ends of this, and we have ideological difference of opinions on this. And so, maybe I'm going to, or maybe that my peer is my best friend. So this is the small kinds of things. We have a lot of data, but where's the information, and who can we trust? Who's trying to persuade us, and who's trying to inform us? So these are also things that haven't played out yet. We have to keep an eye on. And the other thing that I want to keep an emphasis on is that this, who's making this? Who's in control of these decisions that have to be made? You know, because we have to be wary. You know, we do not want to be giving up all of our power, all of the control of our individual identities to people that we don't trust. So we have to have the trust built in, as well as the zeros and ones are in the proper order. The financial transaction actually is executed properly. That's good, but do I trust the people doing it, or are they trimming off a penny or two of every transaction? And where is that penny or two going? You know, so these questions are going to pop up, and who's going to be responsible for finding that out? How are we going to have that investigation? And do we trust the investigators? And the other thing is, there's going to be haves and have-nots. There are people that are going to be able to participate in this, and there are people that will not be able to. They don't have the iPhone. They don't have the fingerprint ID that gives them access. So who's looking out for those guys? Who's looking out for the have-nots? And how is fintech, you know, if we have half the world taking advantage of all these developments and half the world not, what's that going to look like? Is that going to be a just way of proceeding our future? Is that the future we want? So how do we incorporate them into these big pictures? What do we think about the billions rather than the billionaires? How do we keep them involved? How do we look out for them? How do we use this technology to make sure that there's enough food for everyone, there's enough water for everyone? We can't just be thinking about the rich getting richer and more efficient and sharing their riches. You know, we have to have a system that's in place looking for everyone, that's ethical and just. And these are the types of things that we have to consider and factor in when we're figuring out the technologies and how they can be more efficient, more user-friendly. Who's the user? Is everyone a user? Or are just a handful of people, just a handful of peers that can review my academic research, just a handful of people that can use this vastly superior form of cryptocurrency? Is it a million? Is it 2 million? Is it 10? Is it 100 million? Or is it half the world? What about the other half of the world? So let's not forget to ask those questions too. Thanks again, Sharif. Fantastic.
Thank you. Thank you. Thank you, Mr. Adam. Mr. Adam,
You're muted, Adam.
unmute, please.
Do apologise. I have to get to the habit. Yeah, Mr. James Eade was. He reminded me about Jeff Bezos in the wake of Jeff Bezos' space endeavours. That a lot of people on social media are calling for billionairism to be illegal and millionairism as well. So I thought that would be an interesting discussion, maybe for another time. But yes, I just had this thought in the back of my mind throughout the discussion today that analytics and digital technologies have a kind of uncanniness about them, especially when money is involved. And I myself can't help but sometimes feel a little bit uneasy about the possibility that my financial and transactional habits can be viewed by way of analytics by financial experts and bankers who, just by looking at this analytic readout of my financial transactions, can deduce what I am like, what my quality of life is like, and what my lifestyle is, and what my job is, whether I'm successful or not successful. But nevertheless, progress and innovation can be a little bit of a runaway train, but instead of being too anxious about it, we just try and enjoy the ride and be excited for the future and face new challenges with vigor. So yeah, thank you, Sharif. Great topic, great discussion, and good to see everybody again. Look forward to the next one.
Thank you. Mr. Donald, what's your concluding remarks today?
I kind of want to leverage on what James says. He always brings up a great global view and ties it to the individual, and it's always very valuable. When I'm talking about the financialization or the financial transactions, fintech makes things possible that weren't possible before. So for an instance, right now, the most expensive property in Manhattan is closest to the optical cable that goes to Europe. And the reason for that is because they can sell stock, and by the time anyone knows that they've done it, they can be proposed to sell the stock short, because what will happen is, since people are selling the stock, it becomes less valuable, and then they can make money by buying, selling it short. So what benefit does that have to anyone? Nothing. And one of the things that have a problem with in the United States is that we have a huge disparity of wealth. So there's super wealthy, and there's everyone else. I mean, there's something like 1,000 people who donate half the money to political campaigns, or 10,000 people. But so they're people that are controlling this, and they don't really want things to change, and they lobby the governments. So I think that all of us need to become much, much more aware. Basically, if they're making money on money, then why invest it in business? Businesses are risky. Why invest it in new equipment for your company? You don't need to. You're already making tons of money by just using fintech. And so that's a real danger of fintech, and it's something that's unfortunately happening right now. And what needs to happen is governments have to find ways of regulating this. And as everyone's pointed out, it is the Wild West. And so what needs to happen is that we need to inform ourselves, because, as I've said and shows many times, there's research that shows that if you just talk to somebody about something, that information spreads, and it makes a difference within the world. And the other thing is every time the government does something that doesn't turn out right, oh, the newspapers are freaking out, saying, oh, they did this wrong thing, they did this wrong thing. Well, if you look at Finland, my favorite reference point, they have an iterative view where they say, oh, well, that didn't work. What did we learn? And what are we going to do now that, based on what we've learned, to make things work better? And so an example right now is the data privacy laws are not as good as they need to be. We need to keep working on those data privacy laws. And data privacy is a huge part of fintech. But how are we going to tax this? How are we going to make it so that this making money on money thing that's actually harming all of the economies in the world economy, how are we going to start dealing with that? The answer is we start dealing with it. And if we make mistakes, we learn from our mistakes and continue to change. So I think as individuals and countries, we both have to spend energy learning how these complicated financial things are working, and then commit to making them better, both as a person and the fintech that you develop, and as a country, and always understand that it is the Wild West. It is iterative. We don't know the answers. We're going to make mistakes, but the only way forward is to go forward. There.
Mm-hmm. Thank you, Mr. Jeff. What's your concluding remarks?
Yeah, I think as financial tech continues to level up, we're just going to be able to reach into places we haven't reached before, which is the essence of all technology. So we can make sure everyone has like you guys were saying, instead of focusing on the billionaires, focus on the billions. And I feel like it's going to be here sooner than we can expect. And because, I have friends who are developing things that are basically like video gaming, to mining cryptocurrency, and how many millions of hours young people spend playing video games worldwide. If there's a way, which one of my friends is developing, to tie gaming into mining crypto, and I feel like people are gonna come up with ways to use more advanced malleable technology to like cover our needs and stuff. Thanks.
Thank you everyone for joining today's session. Thank you, Professor David, Mr. James Eid, Mr. Adam, Professor Donalds, and Mr. Jeff for joining today's session. And thank you all of our audience. Bye bye and take care.
Bye, everyone.
Bye.
Bye.